So, you own property in Turkey and you're renting it out? Then you are absolutely in the right place. We're about to break down the critical rules for rental income tax, giving you a straightforward checklist to protect your investment and, most importantly, steer clear of some seriously expensive mistakes. If you earned rent from a property in Turkey during 2025, then that means you'll be filing your tax return in early 2026. And, getting this right isn't just a good idea, it's essential. So we're going to walk through a simple but really powerful checklist to make sure you're totally prepared and feeling confident.
Before we dive into the how-to, let's start with the why. A little bit of a wake-up call. Because honestly, understanding the risks of getting this wrong is the single most important first step to protecting yourself and your assets.
Okay, just look at how fast this stuff can get out of hand. If you fail to declare your income, we're not talking about a small fine here. Right off the bat, you lose your tax-free allowance. Then you get slammed with a penalty that's equal to the entire tax bill. And on top of all that, interest starts piling up at over 3.5% every single month. The cost can just spiral.
So how do we avoid all that pain? Simple. Let's start with the very first question on our checklist. Do you even need to file a tax return in the first place? The answer to that all comes down to how much rental income you made for the year.
For residential spots, your apartments, your villas, this is the magic number for income you earned in 2025. If your total annual rent is below 47,000 Turkish lira, guess what? You don't have to file. But if it's even 1 lira over that line, then you must file a tax return.
Now, for commercial properties, like a shop, that threshold is way higher. It's 330,000 lira. But, and this is a big but, there's a catch. To figure out if you need to file, you have to add your commercial rent to any residential rent that's already over that 47,000 lira exemption. It's all calculated together. Okay, so you've figured out that you do need to file. The next logical step, right, is to calculate exactly what income you need to declare. And Turkey has a very, very specific rule for this that you have to know.
This point is absolutely crucial. It's not about what your tenant should have paid you, it's all about what they actually paid you within that calendar year. Just think of it like a cash register. Only the money that physically went into the till during the year gets counted on your tax return.
And this right here is the perfect example of that rule in action. So, for your 2025 tax return, you're going to declare any rent that actually hit your bank account in 2025. That even includes, say, late rent from 2024 that was finally paid in 25. But what you don't declare is any unpaid rent, or any rent you got paid in advance for 2026. You'll worry about that next year.
And for those of you who collect rent in euros or dollars or pounds, listen up. This is a vital detail. You have to convert that income to Turkish lira for your tax return, and you have to use the official central bank buying rate for the exact day you receive the money. All right, now that you know you have to file and you know what income to declare, let's move on to the fun part, the strategy. Let's look at the totally legal and really effective ways you can lower your final tax bill. Remember that residential exemption we talked about? It's a fantastic benefit. But notice that little catch at the end. You only get to use this tax-free allowance if you file on time and report your income correctly. You can think of it as a bonus for being a compliant taxpayer.
Next up, you've got a pretty big decision to make. How are you going to deduct your expenses? You can go the lump sum route, which is incredibly simple. You just take a flat 15% off your income, no receipts, no hassle. Or you can use the actual expense method. This is where you deduct all the specific costs you had. It's more paperwork, sure, but if you have high costs like a big mortgage, it could save you a ton of money.
So what kind of stuff can you deduct? Well, we're talking about things like maintenance, repairs, insurance costs, the interest on your property loan, property taxes, and even depreciation, which is just a way of accounting for the property's wear and tear over time. I'd really recommend adding up these costs to see if it beats that simple 15%.
We are almost there. We're in the home stretch now. You've done the calculations, you've picked your deduction strategy. Now let's tackle that final practical step on our checklist, actually submitting the return and paying the tax.
The good news is the Turkish Tax Authority has made this whole process pretty accessible. You use their online system, the Ready Declaration System, which is great because it often pre-fills information for you. You just need to check it, approve it, and get it submitted by the end of March. Then you pay the tax in 2 simple installments, one in March and the second one in July.
And for all you remote investors and expats out there, here's the best part. You do not have to be in Turkey to do any of this. The entire filing and payment process can be handled completely online from literally anywhere in the world.
Okay, let's lock in these critical dates one more time. The income period we're talking about is the 2025 calendar year. The big one, the major deadline for both filing your return and making that first payment is March 31st, 2026. The final payment is then due by July 31st, 2026. Put those in your calendar, you do not want to miss them.
We've covered a lot today, from the scary penalties and the key thresholds to all the calculations and deadlines. But if you remember just one single thing from all of this, what should it be?
It's this, right here. Being compliant is your best strategy. It's your best protection. The rules might seem a little complicated at first, but as you've seen, they follow a clear, manageable logic. By following this checklist, you're not just dodging penalties, you're taking control of your investment. You're turning that tax anxiety into confidence.
And that's the final thought I want to leave you with. Now that you have the tools, take a second to really think about your own tax strategy. Are you just paying tax, or are you actively managing it to protect and grow your investment? I really hope this guide has given you the confidence to take control. Thanks so much for joining me.